There are actually three main ways to minimize your tax. One way is shifting your taxable income away from your personal name or from other entities. So for example, if you had all your income in your personal name as a sole trader, one way of reducing your taxes is actually shifting that to a company. So the company tax rate is 25%, whereas your personal sole trader is 47%. Some accountants say that that's a lie. There's no way that you can actually reduce your taxes. Technically, if you end up taking that profit back into your personal name, yes, you have to pay the 47%. However, if you move it into a company and then reinvest it in a company, then you're paying that 25% for a short period of time. Once you make a good return, you can move that back into your personal name. Maybe you might have to pay 47%, or maybe you're retired by then and you don't actually earn any income in your personal name. As a result, you can balance the profits that you made through that company, and you've already paid 25% tax, so you don't pay too much. The second method is increasing your tax deductions. So your profit then, as a result, is less and your taxable income is less, so therefore you pay less tax. Such ways is like putting money into superannuation, prepaying expenses, putting expenses through the business, finding expenses that you may have paid already so you can claim those expenses. And the third and final way is reducing your income. So reducing your income doesn't mean that you just don't make any money. What you could essentially do is push back some of the income for that financial year. So let's just say, for example, April to June, you realize that you don't need to actually do this job. Scheduled for June, you can invoice it now, but then you decide, you know what, you want to take a break. So as a result, you tell your client, hey, let's schedule it in July. I'll send you an invoice 1st of July instead. So that means that your income actually reduces. So therefore, you don't actually have to pay the tax on it for this financial year. So that's actually a method that accountants actually don't tell you much about. And the reason being is because it's too late. They have the meeting after 30th of June. Your income's already set because whatever goes into your bank account, whatever gets invoiced, it's already done in the accounting system. So it's very hard for us to advise you on ways to minimize your tax by reducing your income.